the best ratio we've had so far in this secular market is about 30, some say 33 to 1. So if you take 10,000 divided by 3, you're looking at $333 silver. And I think that's achievable. I do think if, I'm right, my market studies are correct, not that I'm going to blame it on the market because all markets, do what they do. But the indication is strongly that you would see that again, because what you expect at the final phase of a major bull market, be it real estate, stocks, bonds, or the crypto, the acceleration phase will take you to the highest high ever achieved and the best ratio. In other words, the NASDAQ outperforming the Dow by X amount. It should at the top outperformed by X amount again. So again, that shows you about 1/3. So that would indicate $300.
Precious metals expert David Morgan believes silver could reach $300 to $333 per ounce if historical market patterns repeat. His analysis focuses on the gold to silver ratio, which has previously compressed to around 30 to 1 or even 33 to 1 during strong secular bull markets. If gold climbs toward $10,000, this ratio could imply silver prices near $300 plus. Morgan explains that the final acceleration phase of any major bull market, whether in stocks, real estate, Saudi-emerged commodities, often pushes assets to extreme highs. According to Morgan, silver's fundamentals and historical ratios suggest a powerful upside if the precious metals cycle reaches its peak. Now, we present the clips from David Morgan's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
This is a top, or at least a temporary top, or it's time to take something off the table. I suggested to my readership well before the spike that there's two scenarios I'll give you guidance on. That was $100 silver and $200 silver. Okay. And the $100 map worked out very well, actually, for people that were wanting to take partial profits. So before I forget, $10,000 or $100,000 gold, I'm being facetious to make this point. If we go into a true hyperinflationary environment, you want to have metal, period. Doesn't mean 100%. So I've recommended for, my members that I would consider holding at least 20%. So in other words, you could have sold 80% to rebalance the portfolio, to pay off school loans, to start a business, to buy another house, to go on. I don't care. It's your money. You do with it just to improve your lifestyle. And what that means to you is more important than what I tell you to reallocate. If you want to invest, we're pretty looking strongly into the energy sector because it's overvalued. I did that, luckily, I guess, just in the nick of time before the war because oil is moving, but I digress. So I would highly recommend for anyone out there that, well, what do I do? Until the new monetary system is established, I would not sell it because unfortunately in a true hyperinflation, the currency becomes worthless. It's zero. It's like Venezuela where currency is literally in the curbs of the street getting muddy and no one will bother to pick it up because the trash department is putting it into trash containers to throw it away. Now, will the U.S. dollar do that? No, I do not think that's where the U.S. dollar is going, but it is heading that direction. And that's why we're invested in the metals. So until we know with some degree of certainty, the new system is being established or has been established, at that point, you might decide, okay, the last 20%, I am giving it to my grandkids, giving it to a foundation, giving it to the Mises Institute, which is something I've considered, for education on the Austrian School of Economics, so more people understand how the economy really works rather than the Keynesian model that's taught throughout North America. So there's lots of things you can do about it. So that's part of it. And bring me back on or make comments on my comment because I kind of lost my train of thought, but I was so emphatic that there is a point where you don't know what to do. And the best thing to do is to do nothing, which means you hold on to some of it. So I'll bring it back. Yeah. Well-oiled machine called the Silver Users Association. I don't know if it'll even pop up on the web. It might be buried now. But for a very long time in the Hunt Brothers era, up until probably a decade ago when it kind of just disappeared, the Silver Users Association was exactly what it says. Industrial users of silver, and Tiffany's a jeweler, Kodak at the time, because silver emulsion film was used for photographs, which is bygone for, a decade or more now. But regardless, these were industrial entities, large corps, that needed silver for industrial purposes, and they band together basically for the purpose of mitigating the usage of silver to their advantage. They wanted a low price so that their margins were great. Again, that's been disbanded. I don't know if you can even find this, I just said. So bearing that in mind, going to what you asked me, solar panel silver usage at this point, depending on the type of panel, from what I've read, haven't verified, I think it could be up to 30% at $100 silver. So that does go to the direct cost. I mean, if it was 3%, then it went up to 6%. They would just keep using silver and silver. So it could mitigate the production of solar panels, maybe. The price would be passed on to the consumer, obviously. But it also would portend greater effort to thrift, which is a fancy word to say economically, what can we do to substitute for silver? And there aren't many, if any, substitutes for silver in almost all applications. So it would be graphene, which there's been talk about that for years, although it's uneconomic at this time, doesn't mean that there couldn't be a breakthrough technologically speaking, and graphene is cheaper than silver and solar. Or maybe a copper that's maybe coated with silver, or maybe another exotic, or some other way to do it. So there will be efforts to mitigate the use of silver in any industry where it becomes a very prominent component to the price structure of the given product.
Precious metals analyst David Morgan advises investors to consider strategic profit-taking during major silver price spikes. In previous market scenarios, Morgan highlighted $100 and $200 silver targets, suggesting investors take partial profits while maintaining long-term exposure. He recommends holding at least 20% of wealth in precious metals as protection against currency instability or potential hyperinflation. Morgan also emphasizes silver's critical industrial demand, especially in solar panels, electronics, and emerging technologies. Because substitutes for silver remain limited, rising prices could increase production costs and encourage innovation. According to Morgan, silver remains both a monetary hedge and essential industrial metal in the evolving global economy. Let's get back to the interview.
The best ratio we've had so far in this secular market is about 30, some say 33 to 1. So if you take 10,000 divided by 3, you're looking at $333 silver. And I think that's achievable. I do think if I'm right, my market studies are correct, not that I'm going to blame it on the market, because all markets, do what they do. But the indication is strongly that you would see that again, because what you expect at the final phase of a major bull market, be it real estate, stocks, bonds, or the crypto, the acceleration phase will take you to the highest high ever achieved and the best ratio. In other words, the NASDAQ outperforming the Dow by X amount. It should at the top outperformed by X amount again. So again, that shows you about 1/3. So that would indicate $300. It's not enough silver to have that big an effect on the bottom line of the overall product. I mean, a refrigerator or a washing machine or a light switch or a flat screen surface like your monitor or a membrane switch on a microwave or your keyboard or your cell phone, or many, many, many other applications, it wouldn't give a hoot that silver goes from 100 to 200 to 300 because it would be insignificant percentage-wise to the overall price of the end product. So, but solar is massive. I mean, solar is, I think it's like 15%, maybe 20% of the entire industrial use. I mean, it's massive now. So that is a concern. And I think I outlined that well. So there will be pressure. And to go to your question, well, does that portend it not making it to $200 silver? And the answer is not necessarily. Would it mitigate it? It would. People might quit buying silver for solar panels, or maybe a substitution, as I said, could happen. But all markets move at the margin. And if the reason people were buying silver wasn't to put in the solar panels, it was because the dollar is dying and gold's at $8,000 and silver is only at 120. People would buy it as a safe haven status. And then you've got to factor in kind of as a subset of the overall picture. And it's not that much of a sub, meaning less than, because the Indian component to silver is massive. Silver has always been a means of saving and preserving wealth in India, but they became more and more wealthy and more in the middle class over the last decade and a half. And they have migrated more to gold than to silver. Gold is more coveted probably than silver in India, but coming back to silver, because now they have adapted some of the Western philosophies regarding investment, which means an ETF. And the banking system now, as you know, has said you can actually borrow against a hard asset like gold And silver, what a concept. So there's that aspect of a country that's been dialed into the silver story for centuries, not 50 years, that says, hey, silver's important in my portfolio. Silver, and a lot of those people, I would say a lot, I don't know the percentage. I'm making an educated guess, Jared, so you can rein me in if you have better knowledge. But I would suggest that maybe 20, 25% of the population, that is all they have. They don't buy stocks. They don't buy bonds. They don't own real estate. Gold and silver is all that they can afford or buy over time because they are not well off enough to open a stock account or don't really care about stocks. And, the only real estate they ever lived in was their passed down grandfather's house to their father to them kind of thing. So it's something to bear in mind because silver is more a worldwide market now than it's ever been. And that's an advantage to us, the silver investors. So if there's a run to silver based on safe haven status, the industrial demand, mitigation, management, etc., doesn't mean nearly as much as people that wanting it for asset protection.
Precious metals analyst David Morgan believes silver could surge toward $300 per ounce if historic market ratios return during the final stage of a major bull market. In past cycles, the gold to silver ratio tightened to around 30-1, meaning if gold approached $10,000, silver could reach the $300 range. Morgan explains that industrial demand, from electronics to appliances, would likely remain stable because silver represents only a tiny portion of total product costs. However, the rapidly growing solar energy sector uses large amounts of silver. Combined with global investment demand and strong buying in countries like India, silver's safe haven role could drive powerful long-term price momentum. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.